Hello all and welcome you again in the lecture series of Financial Accounting and Analysis. I, Dr. Shikhar Jalota, welcome you for this session and we'll proceed further with the topic ledger accounts and trial balance. So in the previous lecture, we talked about the ledger accounts, that how the ledger accounts are prepared, and we have taken up the question also and prepare all the ledger accounts appearing in that question. So now let's take up that once the posting are all done in the ledger accounts, what next to be done in order to prepare the summary for this. So for that, we'll go back to the question again and we'll see what will be the next step so that we can proceed for the trial balance. So let's take up the question. So this is the question that we have done for the ledger accounts. Now, in the previous lecture, we have done till posting all the journal entries in their respective ledger accounts. Now, after making all the postings, there is a last step that needs to be followed in finalizing the ledger accounts, and let us take that step, that is balancing of the account. If you remember in the previous session when we were discussing about the balancing of the ledger accounts, I told you that we will take up this thing in detail when we will be actually preparing the ledger accounts. So now we have already prepared all the ledger accounts for the question that we were solving, and let us see how to balance the ledger accounts. So for that, we'll take up the cash account first, and the way we are balancing the cash account, in the same way we have to balance all the ledger accounts that we have prepared for the journal entries. So let's take up the cash account first. Now see, in the cash account, you can see from 1st January till 31st January, you have made all the postings, like all the cash related transactions are posted finally in the cash account, right? There is one entry you can see here in cash account of 31st January by balance carried down. Now you forget about this entry. This is done after balancing, what we need to do next. So you just forget about this entry that it is being written in the cash account. You just focus on the entries done in the debit and the credit side of the cash account, other than this by balance carried down, right? So once you are done with all your posting in a particular respective account, now comes the balancing of the ledger account. For balancing, what you need to do is make the total of all the debit amounts and all the credit amounts, right? When you are totaling the debit amount and the credit amount, you will see that debit and the credit totals are different. If the debit and the credit total are same, it means the account is closed. There is no balance further left in that account. As we have seen in the previous lecture also, that in certain accounts, we realized that the debit and the credit side total is the same, which means that there is no balance pending, no outstanding amount left in that balance. But usually it happens for the few accounts that balance is not remaining. Otherwise, in all the other accounts, we usually have the balance left, and we need to balance the ledger account at the end. So let's take up the cash account here. If you see the total on the debit side of the cash account, you will see the total is 11,980. And when you total the credit amounts written on the credit side, you will have the total of 11,400 400 rupees, 11,400, right? So on the debit side, you have 11,980 total, and on the credit side, you have 11,400 total. Now, credit side is less with 580 rupees, right? So if credit side is left with 580 rupees, so what you have to do is you have to make the total of both the sides equal. And for that, you need to write the amount of difference on the side whichever is less. Like in the cash account, there is less amount on the credit side. So whatever amount with which the credit side is less, you have to write that amount in the amount column of the credit side, right? So you have mentioned 580 rupees. Credit side is less with 580 rupees as compared with the debit side. So you have written in the amount column, you have written 580 rupees. Then comes the particulars part. Particulars part is if you are making the entry in the credit side of the account, then you have to make it with the by word. This is now you are clear with this. Okay. So by, and whatever you are mentioning in the amount, for that in particulars you have to write by balance, right? So because you are balancing the amount with this particular you are balancing the account with this particular amount, so you have to write by balance. Now by balance, CD here means carried down. This means you are balancing this amount for now with this particular amount, and this amount will be further carried on for the next time period. Like if you are preparing this account for January time period, and you have the balance of 580 rupees left for cash for this January at the end, it will be further forwarded to February for further usage in the business. So what you are doing, you are further carried forwarding this 580 rupees for your next time period. So this carried down simply means that you will be forwarding this 580 rupees to the next time period, right? So whenever you are balancing the account for that particular time period, you will write to balance carried down or by balance carried down with the balancing figure, to show that this is the balance which will be carried forward to the next account, next time period. So what we have done here is, since cash account was less, credit side was less with 580 rupees. So we have mentioned 580 rupees so that the total of both the sides become equal with 11,980 rupees. And we have written this on the lower side. Since credit side was lower, we have written this 580 on the credit side. Since we are balancing this account at the end of the month, last date of the month, so we will put 31st January as the date, and by balance carried down we'll mention because it is the credit side. If it would have been on the debit side, then we would have mentioned to balance carried down, right? And you can see here, then the account got totaled with the same number, 11,980. This you all have to do with all the ledger accounts, that at the end when the balancing is being done, you have to make the total of the amount column, and the total should be equal. Debit and credit side, both total should be equal. And whatever is the balancing figure, you have to forward it for the next month. So 31st January balancing figure for cash account is 580. So you are forwarding it to the next month, that is 1st February. To balance brought down. BD means brought down. Brought down here means that from the previous time frame, you have taken up this figure and you have brought down this figure from January 31st, 580 rupees, right? So this is what the balancing is. Now you can see here for the interest account, we'll take up the next account here, that is interest account. So for the interest account, what you can see here is, there is one entry on 26th January for interest, that is by cash account 200. And other entries 31st January to balance. So forget about to balance carried down. We have only one entry which have been posted from journal to ledger, that is on 26th January by cash account. So what you will do, there is only 200 rupees on the credit side, but there is no amount in the debit side. This means the credit side is higher and debit side is having no amount. So the difference between debit and credit side is 200. So we'll put 200 on the lighter side. Lighter side is debit side. So we have put 200 on the debit side amount column. And since we are doing it on the 31st January, so date will be 31st January. We always do it at the end of the time period. So last date we take up as the as the end date. So that is 31st January in this case here for this question. And then since this balancing figure is appearing on the debit side, so what we are doing? We are writing it with the help of 2. So 2 balance carried down 200 rupees and total the ledger account. Both sides will have the total of 200 rupees, and this balance will be further brought down on 1st February by balance brought down 200 rupees. Yeah, one thing you have to remember very well, that one more thing I want to tell here for the debit, for the balancing figure is that when the balance is appearing on the credit side, it will be the debit balance. It will be called as a debit balance. And when it is appearing on the credit side, debit side balancing figure, then it will be called as the credit balance. Why is it so? Because as you have seen, the debit side is higher and the credit side is lower. It means the excess of balance is of debit. That is why we call it as the debit balance. In the interest account, you can see the excess amount is on the credit side. So that is the credit balance. For that, we need to write the excess amount in the debit side. So it is reverse. If the balance is appearing on the debit side, it is called as the credit balance. And if it is appearing on the credit side, it will be called as the debit balance. And accordingly, we will post it. Why I'm telling you? Because this is the concept which we will use while preparing the trial balance for this question. So in the same way as we have done for the cash account, interest account, in the same way we will do it for the other accounts also. Like in the bank account, there was balance on 31st January, there was balance of 25,000 and there is no other journal entry related to bank account. So this 25,000 debit total, you have to write on the credit side also, you have to write the same amount to balance the account. So both the sides will be having 25,000 as the total, and the balance will be 25,000. So appearing on the credit side, so it will become the debit balance. Then for the stock also, there was one entry only, the opening entry on 1st January, 2 balance brought down 20,000. Then on the 31st January, for the balancing, we have written by balance carried down 20,000. So the account got balanced. Then in the next, you can see here, in the same way, we will take up the other accounts also. Like now you can see here in building account, there was 10,000 balance, which are being carried forward as it is. Then in furniture account, it was 2,000 balance carried forward as it is. Then Vijay account, there is no balance because Vijay account was debited with 2,000 rupees, then again credited with 2,000 rupees. Final settlement is being done for this account, so no balance left. Then Anil account was having 1,000 rupees balance. Madhu account was having 2,000 rupees balance. Then Anand account got settled because we have forwarded the balance of 1,000 rupees on the credit side for Anand, and on the debit side there is settlement entry. So its account has been balanced, debit and credit side both are having total of 5,000. Then capital account is having total of 55,000 balance on 1st January, forwarded from the opening entry. Then there is no other further transaction related to capital account. So we have balanced this with 55,000. Then next is Bablu's loan account, 10,000 balance is outstanding. For purchases account, you can see there are few entries on both the sides, debit and the credit side. So for this, you need to balance the account. As you can see here on the debit side, it is 9,000 total. And on the credit side, there was only entry of drawings, 200. So the balancing figure will be 8,800 in the purchases account. So balancing figure 8,800 appearing on the credit side. So it will be called as the debit balance. Same for the discount also. You can see here for discount, there are 400 rupees on the credit side, and on the debit side, it is only 220 rupees. So the balancing figure is appearing on the debit side, 380 rupees. So the total of both the debit and the credit after balancing figure got total with 400 rupees. So same is with the other accounts also. In the same way, you have to balance all the accounts appearing here in the ledger account, so that For each and every account, we can be having the balancing figure. These balancing figures are important because we have to use it for the trial balance purpose. Until and unless we have the balancing figure of all the accounts that we are preparing here, we cannot prepare the trial balance. So we will take up the concept of trial balance in the next lecture. Till then, keep revising the journal and the ledgers so that we can discuss the trial balance in the next lecture, and we will prepare the trial balance for this particular question in the next lecture. So till then, thank you, and be intact for the question for the next lecture. Thank you.